Next up is our panel on artificial intelligence, another very topical issue, one on which the IAIS has also been taking forward work. So last year, the IAIS undertook a stocktake exercise of supervisory practices and developments on AI in 12 jurisdictions, and this year we're working on developing an application paper which will provide more insights for supervisors on supervisory practices with respect to the use of AI in the insurance sector from both a prudential and a conduct perspective, with particular focus on governance issues, including model risk governance. So we will hear more about that in the panel, and let me now hand over to our moderator for this next session, who is Director Chlora Lindley Myers, well known to the IAIS and many certainly in the US as well, IAIS Exco member, Director of the Missouri Department of Commerce and Insurance, and most recent former NAIC President. Great to see you, Chlora, and over to you.
Thank you so much for that introduction, Jonathan. I want to wish everyone a good morning, good afternoon, or good evening. I want to thank you so much for joining us for this conversation as we discuss how supervisory tools can be used to address emerging risk from its deployment. I will ask the panelists to introduce themselves, and I will note that their biographies is on the Global Seminar website. We will start with you, Petra.
Yes, hi everyone, and thank you, Chlora. Happy to be on the panel. I'm Petra Hielkema. I'm the chairperson of EIOPA, the European Insurance and Occupational Pensions Authority, but more important for this panel, I am the chair of the FinTech Forum at the IAIS.
Henrik?
Henrik Naujoks. I'm senior partner at Bain and Company. I'm leading our APAC financial services practice. 30 years now working with our clients on topics, and most recently, obviously, a lot on analytics and Gen AI implementations.
Thank you. Ericson?
Hi, this is Ericson Chan. I'm the Chief Information Officer, Chief Digital Officer for Zurich Insurance, based in Zurich, Switzerland.
And last but certainly not least, I am going to call on Benoît.
Thank you. So I'm Benoît Lallemand. I'm the Secretary General of Finance Watch. We look at this from the public interest perspective and provide technical expertise to senior policymakers, mainly in the EU, but also at international level.
Thank you so much. With that, we will launch right into the governance and accountability. And I will direct this question to you, Petra. The IAIS is developing an application paper on AI. Can you tell us about the issues being considered as the paper is being developed?
Yes, I am happy to do so, Chlora. So for those who may not remember, last year the IAIS looked at the ICPs that we have and asked the question, do we need major changes to deal with AI as supervisors? And we concluded we do not. We can work with the ICPs, but we also included we need more detail on how to actually do that in reality. And that is what we are drafting. It's the application paper on AI, and it will consider a range of AI-related issues, looking at the supervisory practices that need to be developed when we are supervising AI. We will align our work with other international setting bodies like the OECD and the G20, and we will in that context, incorporate the insurance specificities. And what I want to say with that is that there's a lot drafted currently on AI, also for supervisors. But as the IAIS, we really want to focus on the insurance specificities and how that is anchored in a proportionate and risk-based supervision. And then we will address 4 broad areas, and I'll briefly touch on all 4 of them. The first one, an important one, is governance and accountability. And here the focus will be on an effective integration of AI risk and management of AI risk into the existing enterprise risk management, and including with that appropriate human oversight. So it will consider the roles that need to be taken up by the board, by senior management, and also to ensure that there is accountability in decision-making processes. So that's the first. Have it embedded in your organization as you do with all the other tools you use in your risk management and governance. Now, the second topic we touch on is robustness, safety, and security. And this will consider the governance around the AI models themselves and the assessment of the robustness of those models as well as their security. And it will highlight issues around the importance of infringing copyrights, but also intellectual property rights. But in the end, what it is for is that the tools you use are robust, and they are safe, and they are also secure, also when it comes to possible cyber concerns. Now, the third one is transparency and explainability. And here we really come in the field of consumers. And it considers the importance of ensuring fair consumer outcomes when AI systems are used in common practices, and also how what you use and that needs to be tailored to information that is actually needed by different consumers. And it will also consider the need for robust governance of third-party risks. For instance, in common with existing supervisory practices, there is an expectation that insurers cannot delegate responsibility for AI activities undertaken by a third party. So consistent with the ICP on effective governance and the other ICPs, there should be good arrangements in place when you use AI, also when it comes to explainability and transparency in relation to consumer needs. And that comes then to the final point, and that really touches on consumers, and that is fairness, ethics, and redress. And it will highlight the need for AI systems to incorporate fairness by design, and it's because it should ensure always good consumer outcomes. Now, this part of our paper will consider the importance of maintaining a good data quality, given the significant additional data that will be used when you use AI tools, but also the need to focus on causal relationships and not just simple correlations. And it will also consider the extent to which insurers should be able to assess the outcomes generated by AI systems and their broader impact in a society. And then you need to think about affordability, exclusions, but also mutualizations. So those are the 4 chapters we're working on, Chlora, and we hope to bring some results by the end of the year.
Thank you so much, Petra. We'll move into the next question, which I'll direct to Henrik and Benoît. And we'll start with you, Henrik. What key governance and accountability issues are insurers focused on as they look to greater adoption of artificial intelligence? I think you're still on mute, Henrik.
Sorry. Chlora, we see in our consulting practice that governance questions and operating model questions around what I would call AI at scale, how do I really adopt this, is a big and an evolving topic. And it may be worth to take a step back, because what are the key risks to handle? We have the risks of biases that are inherent in the language models that are used, which often requires new testing forms. We have copyright risks. Obviously, is the content created object to any copyright restrictions? We have unintended intended consequences of usage. So the whole question of managing, of monitoring outcomes becomes very relevant. We have obviously the now more well-known risks of using cloud services. so data privacy, data residency risks. And the other component that I would raise in this context is that we see also a development from the governance for AI models versus Gen AI models, because at AI models, you have basically, you can validate them more traditionally. What I would say, there is the model aspect and there is the technology aspect, which is about, for example, access control, access management, data residency. At Gen AI, you are building applications, and this requires often a much more integrated governance to handle the risks. And if I now translate this into the operating model and some of the organizational implications, we have traditionally often separate data and analytics organizations. So we have a chief data officer and we have a chief analytics officer. And if I put it bluntly, the chief data officer is playing defense, very much protecting, securing, or watching out data security and compliance. And the analytics officer is the one who is responsible for value creation, playing offense. I think what we see increasingly that these two roles are combined in order to drive business value across the full data lifecycle and basically creating a unified view of data across both the value creation side and the security and compliance side. But this is it's a topic that is, I think, on top of the mind of many, if not all, insurers, and where we see also an evolving trend. And if you go into other industries that might be more advanced in some of these topics in analytics, applying analytics and AI, there are some, I think, good learnings from them, as, for example, going more into a direction of integrating these two functions.
Thank you so much. And Benoît, you can speak on this same question.
Thank you. Yeah, so first of all, we extremely reassured by the very comprehensive approach developed by that Petra mentioned a minute ago and adopted by EIOPA and of course also IAIS. Another good news, as you might know, is that as part of the AI Act in the EU, there's a definition of two high-risk use cases for the financial sector for AI systems, when they use one to evaluate the creditworthiness of a person, and then for the risk, so that's more on the bank side, and then for risk assessments and pricing for life and health insurance of a person. So we suspect that this issue of AI in relation with these issues and these risks will remain high on the radar of EU supervisors and regulators. So that's all good. As I said, if you allow me to take a step back just 1 minute, we look at this from a public interest perspective, and so yes, insurance sector serving society, and how can AI enhance that capacity, and also citizens having access to basic, fair and simple financial services, which they need to fully participate in society, right? And so the thing is, these financial services, these needs, they've remained pretty simple for a long time, and the related gaps in terms of the offer also have remained pretty stable, where we've seen an increased complexity within the offer of financial services. And so we see a risk that AI just increases this complexity and this opacity also from a customer perspective. And so again, at this level of sort of the meta governance, we see an important role for supervisors and regulators to strike the balance between the expected benefits of AI in the sector and the costs and the risks. And if I may, because I worked on that for 2 or 3 years, the same question was asked when high frequency trading became a big thing in the EU. It was already in the US. And to make it really short, the sort of capacity that supervisors would need nationally and internationally to actually properly supervise high frequency trading would literally cost billions to taxpayers, right? So do we want that? So I just want to say before we go on, let's keep that balancing act in mind in terms of, again, the expected benefits. And we see, added customer value with the introduction of AI to some extent, but we think the costs and the risks are quite important in an environment where, of course, the private sector will be looking to compete and maintain or increase profitability. So That's all okay, but again, that creates a tension with the sort of public service nature of the insurance sector.
Thank you, Benoît. We will move on to Ericson. I'm going to ask you, what use cases do you have for AI, and what changes have you made to your governance as you implemented these changes?
Yeah, thanks for the question, Chlora. First of all, I just want to echo what Henrik touched on earlier, is that when we now dealing with AI or using AI, the offensive side, like data analytics, and the defensive side, security, they need to look at it together these days. And it's not only on the AI side, but generally on digital transformation. We need to look at this end to end. This is why many of the multinational corporate, like Zurich, is combining the CIO role and the CDO role in one, like myself. So in order to balance the risk and value here. So, and what AI is not new, as mentioned before. So as a knowledge company, we have been using it for quite some time. The use case that we are talking about is more so about generative AI, because this is new, only started about a year and a half ago. So we leverage the core capability of the generative AI, a large language model, is the capability of extract information from text, a large document or thousands and thousands of documents, from unstructured data to structured data, which was not possible previously. And then to do summarization. These are core capabilities of the generative AI model. And then also use is to build a knowledge board to help our employees. So all of our use case so far is only using it to help our own employees to be more productive, more equipped, do things more faster, and at much higher quality. So everything is an assistive approach. So helping our underwriter, helping our claims adjuster, and call center agents. So, and we always keep, we do not use the large language model directly liaise with our customer today. So they are all assistive approach. So that is called a human in the loop approach. So what governance framework or changes we have made? Well, because this is just like any new technology, we want to be a bit more preemptively, to be a bit more cautious to avoid any unintended results here. So we, of course, similar to what Petra mentioned earlier, is pretty much the same, to set a number of principles. Maybe I'll bring a little bit more color on those principles, how we apply. So definitely we care about the reliability, then how we use the AI. We need to prevent any bias in the outcome. So therefore, we have using our risk management framework, code of conduct to govern that, and then also have a human in the loop as a human oversight, so that to validate the result. So safety was mentioned earlier. So what does that mean to us? We make sure all the LLM or large language model only being deployed and used in a private protected environment. We don't use any public model in a public environment. So, and then we, transparency, that is also the case. Then we will make sure whenever we use AI, we declare it. We declared it clearly to our customers that this is the case and how we are using AI. So we can explain the outcome. And then the outcome normally is so that we can trace back where are the source information, this model based on this 1, 2, 3 pieces of information to generate this kind of outcome. So generally, the approach is very similar. It's the same principle as what Petra highlighted earlier, but just give everyone a little bit more examples on that.
And Ericson, when you're talking about, unbiased information, I guess, you want to make sure, and I want to know how you do this. You want to make sure that that your implications for the governance and accountability doesn't, distort any customer data in particular. Can you kind of talk about that?
Yeah, definitely. I think first of all, the most important thing is the quality of the data. So then we need to make sure that quality of the data is there. And then we have a assessment framework. Assessment framework, the key of that is make sure that I think when we talk about bias or maybe use the term of fairness, is often it's not because the intent is not being fair. The often is the lack of consideration of fairness of this having this process that is the issue is there. So that is why we have this assessment framework before any model being rolled out to check if everything is what is intended to do. So that is give us a much better confidence. So before things get rolled out, is that is the intent we originally set out to be.
That's great. So we're going to now move into round two, the transparency and explainability. So I'm going to ask that the polling question comes up, please. Thank you. At which is, will insurers be able to effectively explain artificial intelligence models to the supervisors? And so we will be making that available so that you can answer that question. Which means now I will go into, I'll ask Ericson to tell me what extent can we expect AI models to be explainable? Are they explainable to the common person?
This is a interesting question. So because it depends on AI model or generative AI model. If it's AI model, definitely we have been explaining that we can quite establish approach how to explain the outcome. But generative AI, which is the new one, started about a year and a half ago, the intent of generative AI is to create new information, to generate new information. So it is inherently is very hard to very particular how to explain how the AI model works itself. But then that does not mean we cannot explain the outcome. We cannot explain how the AI model works. That is but then we can still explain the outcome. So this is why we need to create a lineage, is the traceability, so that when there is outcome coming from the model, we need to be able to explain what information this outcome was based on. It's like a citation or approach, so that when the outcome is there, a person like ourselves, underwriter, can go back to validate that. So cases like we do have AI application that compare, for example, a claims submission versus the policy coverage. So, and then the AI model will be able to make an assessment, so with the outcome. But then the most important thing, and then we need to be able to tell is this outcome is traced back to which clause in the policy coverage document, and then which part of the claim submission. That is because of this two pieces of information to generate the outcome. So we can explain what the outcome was based on, but technically, because of the generative AI nature, you cannot explain how the model really works. That is so that is some nuance there, but it does serve the purpose. It becomes explainable.
Thank you. Henrik, would you like to give your perspective? You're on mute still.
I fully agree with the assessment of Eric's that obviously explaining AI the Gen AI component. And in many applications, it's a mixture of AI components and Gen AI components is different, but it's super important because not only because supervisors might require it, consumers will ask for it. And the adoption by, for example, relationship managers, agents, claims assessors is increasing with explainability. So there is a very good reason that when you are designing Gen AI applications, that you make explainability a part of the process. And I give you an example. We developed a relationship manager advice tool, which is based on Gen AI and AI components, and basically building on consumer data and the chief investment officer view and other contextual data. We developed what is called a tree of thoughts. So 3 synthetic advisors who are arguing against each other what might be the best solution. And the result of this, the reasoning, was made transparent or is made transparent to the agent or to the relationship manager, which helps them to understand why do they come up with this product that I should recommend. And we developed this in 14 weeks, but including the agents. Just to be very frank, we measured each week, are they accepting it? We measured it with something called Net Promoter Score. And the Net Promoter Score, which can range from -100 to +100, started very low. And each week, as we made them part of the solution and as they started to understand how this works and they could give input, etc., at the end of this process, we had a Net Promoter Score of 80%, which means 80% were really enthusiastic about this supporting tool for them. And they understood what is happening. They didn't understand, as Ericson mentioned, you don't understand exactly how this works, but they understood the outcome. And going back also and echoing a bit about what Ericson said, at the end, what we have to make sure is how can you evaluate that the output is predictable and repeatable, number one. And the second is, how do I make it explainable, which means referenceable, traceable information, what is actually used. And the second is, can I validate the output? Can I look for factual correctness? Can I make sure the right context, the right tonality is used? So for me, explainability is more than simply satisfying supervisor needs. I think it's essential to create adoption at scale and to create the consumer acceptance.
Thank you. The next question I'm going to direct to Benoît, and then after that, we will look at the results of our polling question. Benoît, what are the key issues of transparency and explainability for the use of AI models, and what considerations should there be on consumer outcomes? So if you could kind of address that, and then we'll look at our polling results.
Thank you. Yeah, I think as we just heard these terms, these notions, and I think the very possibility of these notions of transparency, accountability, explainability might be essentially challenged by AI, right? So the combination of massive databases, very powerful processing, large language models, machine learning, create capacities which are way superior to the human brain and our mental ability. So I think it means these notions become very challenging, and I think a good recipe would be in this space to advance at a pace where we gradually learn to manage these new dimensions. A principle should be, when it comes to explainability or transparency, that the burden is on the supervised firm, right? So in a way, it shouldn't really matter whether you use AI or you use an Excel sheet to prove that you're managing your risks effectively, right? Or to prove that you're not abusing customers, but instead you're serving customers properly. So yeah, this could be a sort of technology neutral perspective from the supervisor. But so again, that means AI cannot be a black box for the insurance companies. I mean, we heard from Ericson, it's far from being the case. But it is the case with in some elements of machine learning where it is big, and we also heard that not even to mention generative AI, where it's hard to see why and where exactly a decision has been made, and again based on what. So I think again, these are challenges to the accountability element. And as mentioned by Petra earlier, in terms of accountability, it should also go beyond retail issues, but cover any potential economic or societal harm resulting from the use of AI. And here this should be a strong incentive for firms to properly test their systems in a way that anticipates any potential such harm to materialize. I think in terms of the potential outcomes for consumers, we will discuss that at the next question. So I think I'll leave it there for the moment.
Thank you, Benoît. And if we could see the polling results, please. So it looks as if roughly 59% is saying no, and 41% is yes. I think, or did I get it wrong? Let's see. Yes. So, and so that, that basically for that polling question, which is, will insurers be able to effectively explain artificial intelligence models to supervisors? The overwhelmingly sort of, because it's 50, about 59%, it is, no, that you won't be able to do that. So I will go now to Petra to ask her about what challenges do supervisors face in developing supervisory regimes that provide for effective transparency and explainability. How do we overcome this 59-41 split?
Yeah, so good question. And maybe to start with, I think a very important notion, and Benoît alluded to it, which is this being technologically neutral. I think one of the reasons why, for example, we said the ICPs are still fine, but also why I would say that the introduction of the AI Act in the EU does not all of a sudden generate all kinds of new things to consider when you use AI as an insurer, is because a lot of what insurers already need to do when they use an Excel spreadsheet or an internal model is exactly what we also expect them to do when they use an AI, when it comes to data quality, explainability, understanding the outcomes, explaining the outcomes. Here it is important to keep in mind, particularly if you refer to the AI Act in the EU, that is an act that is now introduced for any AI used anywhere in the economy, so not something specific for insurers. And insurers already had Solvency II, and in many other jurisdictions, supervisors already have regimes that are able to deal with these requirements that I just listed. The question is how, and then to refer back, and then I'll say a bit more on the challenges we then have. But I do think that part of I think good governance in an insurer when using AI is that if really you are using a tool that you cannot explain the outcomes of in any way, I'm not saying there could be different ways, but if you can't explain it, then should you already be using it? And I think that is a question, particularly, moral compasses are there, but will they function when competition comes in? And I think that is a question for boardrooms. But then back to the question for insurers, some AI systems are seen as, coming back to the questions for supervisors. So some AIs are seen as black boxes because they're complex in their functioning. They can learn from data from various levels of autonomy, and it makes it difficult, challenging at least, to explain how decisions are reached. So transparency and explainability are related to fairness and related to non-discrimination. And in many respects, they are very necessary to make sure that we ensure accountability. So a lack of understanding of the functioning of an AI system may also have implications from a prudential perspective. For example, if you use AI in your underwriting and inadvertently you fail to price the risk segments accurately, the undertaking could actually potentially acquire risk at a premium level that is insufficient. So there are many reasons why the AI that we see being used also in the back office to enhance efficiency, but we do see a trend now that it slowly moves also in the front office and in the in context with clients. There are several risks you need to consider, because if you can't explain, if you do not understand what it is doing, you may actually be keeping afloat a system that is not helping you to do your to underwrite your risks well or to serve your clients well. And so there should be a meaningful explanation of outcomes of AI systems, in particular in those AI use cases that may have a material impact on consumers, but also on your undertaking. It works both ways. Now, on the issue of transparency and explainability, that should be assessed in conjunction with other governance and risk management measures. For certain use cases where the use of complex AI systems results in limited explainability, there, of course, the Ericson, I think, alluded to that, particularly with generative AI. It may be difficult to avoid that. You will at least have a challenge with explainability, and particularly the AI systems that are used to analyze unstructured data sets like images, like video, like audio, or text. There, the implementation of complementary governance measures such as adequate data governance, the use of guardrails or human oversight becomes very, very relevant. On the one hand, if consumers, if they have a damage, can just simply send a picture to the insurer and then get a very quick answer, that can be really interesting from a consumer perspective. But it does mean that in the assessment of the picture, both the damages as well as potential fraud, the tools that I use still need to be part of an outcome to the consumer that is a fair outcome, and that can also be explained in the case there are questions. And that also means, if you're working on that as an insurer, that different stakeholders will require different types of explanations. Not all the stakeholders that you work with need the same information, have the same technical knowledge. And I think organizing for that as an insurance entity, I think is helpful. I mean, given that typically consumers have a limited knowledge of AI, I think they would require very plain and simple and easy to understand information, not involving excessive technical language. But in contrast, other stakeholders like your auditors, but also your supervisors, will most likely require comprehensive and technical information showing that you are in control. So finally, from a supervisory perspective, how do we deal with third-party service providers, including big techs, but also others, because they play a role and they share therefore also a responsibility, taking into account intellectual property rights of third parties. There needs to be consideration from a supervisory perspective. And supervisory, they should ensure that insurers not only obtain the adequate information and reassurance from the third-party service provider about the characteristics, the capabilities, and the appropriate fitness for purpose or limitations of materiality that is important to the AI system that they outsource, but it should also include adequate governance policies and perform appropriate due diligence to affirm compliance. So I think in general, what the challenge for supervisors will be is that maybe the thinking on how we look at explainability, what we accept as a good explanation, there I think through additional governance requirements and a conjunction between strict rules, but other governance requirements and risk management measures, there is room for the use of tools. At the same time, there may be technologically possible tools out there that's simply for using them for serving customers in the insurance industry. It's too early because of all the things I just mentioned.
Thank you, Petra. I did get a comment from a member of the audience saying that explainability is necessary, but not sufficient. The AI outcome must be disputable. And if the data underlying the outcome is wrong, then the outcome should be reviewed with corrected data. So that, was sent in by a member of the audience. And we're going to move into round 3, which a new polling question where we're talking about fairness, ethics, and redress. And in this question, it says, to what extent will the wider adoption of artificial intelligence lead to the following outcomes? And so, the outcomes there are financial exclusion of certain customer groups, increased protection gaps, increased risk of bias, reduced trust in the insurance sector, and none of the above. With that, I'm going to call on Henrik to ask him what frameworks can insurers put into place to reduce the chances of unfair outcomes and support consumer redress. And that'll give our people a chance to sort of weigh in on that particular poll question. But if you could address that, Henrik, I would appreciate it.
Yeah, thanks a lot, Chlora. And I think it's less about the concrete framework you're using, but how you get it basically in motion and enforce it. Because there are different frameworks. Petra has introduced one. We are using one with 5 pillars: with fairness, accuracy, privacy, ownership, explainability, transparency, ethical and social concerns, rules and regulation. In preparation for this, I asked ChatGPT for framework. They had a framework, I think, with 8 dimensions. So the framework is the one thing. What I think is important, what are the principles to basically meet the different AI goals and deliver on these frameworks? And I would like to highlight 5 principles that I find personally important. The one is making your infrastructure private and robust, because at the end, a resilient architecture to protect the privacy of your own data as well as of the customer data is key. Then something we have now discussed already, the design for transparency and explainability, with a clear path to a recourse and redress. I think something like a rule that any machine decision with the ability to get redressed or to get a human in the loop is I think, important. There is a topic on education and training, which is, I think, what we see is, especially with Gen AI, with AI, and this goes also back to some of your comments, Benoît and Petra. I think while the principles are all the same and hold true, tech agnostic, the difference in Gen AI is obviously has to be put into consideration, as also Ericson pointed out. But there is a big need and a big gap, I have to say, in order to train and educate the employee, which is needed in order to get responsible AI into motion. And then there is two other points I would highlight: to ensure the oversight and disclosure before and after the deployment. And then last but not least, select the applications based on the maturity and risk. So especially with a young technology like Gen AI, we suggest our clients not to start with customer-facing applications. It's a young technology. It's a quickly evolving technology. We are not fully sure about some of the implications. And I think thinking through how mature is the solution and what is the associated risk, and starting with low risk, maybe internal processes, versus starting with something where you have a direct consumer impact, I think is in the interest of everybody, of the consumers, of the insurers itself, and themselves, as well as of the supervisors. I'm always saying, while Coca-Cola may go quickly accelerate the Gen AI path, we are not selling soft drinks. We are selling financial products, the industry. And one of the most important things is trust. And therefore, I think this last principle to be aware on when and how to select the applications and to implement them and to deploy them is another consideration among the others that I've already mentioned.
Thank you. I'm going to move to Petra. What steps do insurers need to take to ensure fair and ethical outcomes for consumers when they're using AI? And how can effective redress be effectively maintained?
Yeah, so that is a key question, Chlora, and thanks for asking it. And I'll go back to this fairness by design approach that I earlier mentioned, an approach that should be embedded throughout the AI system lifecycle. And I'll touch on what that means then in practice. Let's get practical per some of the topics that I earlier mentioned that have our focus. So let's look at governance and risk management systems. What would that mean in practice? It means that we would expect insurers to develop ethical guidelines to the extent they do not already have that. I know many insurers are working on those or have them in place, but you need to have them in place. Ethical guidelines, frameworks, and an infrastructure that guide the responsible and ethical and trustworthy adoption of AI within the organization. In a way, it's not complex. This is what you need to do, and then you need to stick to it. Data quality. Ensure that the data used to train AI models is representative and free from historical biases. Have checks and challenges on that, and make use of complaints and feedback also from consumers if there is a signal that maybe some of the data might still be biased. Often a bias is you can only see it if it's mentioned to you, and then all of a sudden it becomes visible. Use those techniques to just upgrade your data sets to a level that really supports the use of AI in a good and fair way. It also involves diversifying data sources, scrutinizing the data, etc. Transparency and explainability, what does it mean in practice? Here it means that you design algorithms that are transparent and explainable. That's the first. That is what you design, and that is not somewhere happening in the tool. No, that's what you put into the tool. You need to be able to meaningfully explain how decisions are made to be able to identify any potential bias in the process. So you need to work on this. Then clearly what is essential is that you monitor the outcome of AI systems. So implementing techniques and methodologies that are there to detect, to measure, to mitigate biases in AI models, and to include with the use of relevant fairness metrics, a way of working that also helps you to trust the outcomes of your tool. Now, focus on causal relationships is important. Don't just rely on simple correlations. So understanding causation really helps underwriters, among other things, to accurately identify the underlying reasons for risks, better price the risks, and develop risk management practices to mitigate those risks and comply with non-discriminatory laws and ethical considerations. So again, this is what needs to be in place. And finally, but definitely not less important, accountability and redress mechanisms. So when AI systems, regardless of what level of complexity or explainability they have, when they are used in a decision-making process, then by definition, disputes can arise between the affected stakeholders. A consumer may want to understand why their application for an insurance product was rejected, why the compensation of their claim is not as much as they were expecting. This happens. This happens today. This will also happen after a decision that was also made with the help of AI. So supervisors should ensure that insurers have in place, so first of all, insurers should have in place an effective and fair and transparent redress mechanism, both for complaints and for claims disputes. And in particular, insurers should be able to give a meaningful explanation about the claims or complaints resolution determinative factors. Why is this, I think, especially important in the case of AI? Yeah, of course, it's because you are accountable and you remain accountable for the explainability. But moreover, there is, and you feel that in this discussion, there is this genuine hesitation of AI and a computer deciding for me, and then what if the computer says no? The better insurers have in place a mechanism that when there is a concern, when there is a complaint, when there is a disappointment in how much was compensated, that there is not a computer talking back to the consumer. There is not an answer that says, but the computer said so. That actually there is still the human that is the insurer that explains why it happened, why that was, or maybe an insurer that learns from the consumer that the decision wasn't actually misinformed by the wrong data and then improves. If as an industry you get that right, you not only build the trust in insurance, but you very much also, I think, we have the trust in insurers using AI, and that should not be a concern. Whereas now these concerns are very much there. So I think very much an item to focus on when you are developing the use of AI in your organization.
Thank you, Petra. I'm going to ask that the polling results come up before I go to Ericson and Benoît for our last few questions so that we can take a question or two from the audience. And what we're looking at here, the rough poll indicates that 90% quicker underwriting, cheaper provisions, 43%, increased bias, 43%, financial exclusion, and reduced trust is 20%, and financial exclusion is at 36%. Looking at, our rough poll results, Ericson, what approaches and areas are you focused on for ensuring good customer outcomes?
Yeah, I think the theme is very similar to the polling results. Our focus is, because I mentioned earlier, is assistive approach. So we're not changing the core, our core processes or the business model. So we are using generative AI these days to make our claims settle sooner, service quality better. So, and then also we always have this human in the loop mechanism. So it's not to have the machine to do autonomous decision making. So that is how we safeguard the fairness, and then our core way of doing business has not changed. And then in order to do that in a structural way, and then we have developed this similar to everyone else, but then we have developed also AI assurance or AI assessment framework, so that we consider a lot of different factors as a risk-based approach. So to look at if any decision making, how the AI would be involved, even if it's not autonomous. So, and then how complex the model is if the use cases involve any personal data to be part of this use case. So we use this assessment approach to further strengthen the case before even get it rolled out. So the approach we tend to take a far more cautious approach here when using generative AI.
Thank you. And I'm going to go to you, Benoît, on this last question before I get to my two questions from the audience. Do you have any concerns, Benoît, about the impact that AI may have on the affordability and availability of insurance?
Thank you. I can be quite short because so much has been said, and again, including the quite overarching perspective that Petra outlined. Yeah, so we see challenges. I think that the poll results are quite interesting and probably a good indicator. So again, we see the potential benefits in terms of efficiency gains for consumers and firms, the personalization of products and services, or also new financial management tools. But in terms of the risk that's been highlighted, we do see the risk for financial inclusion, and we need protection of consumers against that. So there might be an incentives for consumers to consent to share data related to telematics or wearables, all these new tools. And so at the last moment, it could be an exclusion of the service if you're not agreeing to that. But even just the fact that you would push consumers to open access to that sort of very private data is a concern. We also need regulation, as we mentioned, to address potential data misuse and related price discrimination or quote unquote price optimization practices. Also look out for unfair commercial practices where the price personalization that I mentioned is not provided based on a fair and objective criteria, but more on the concern for the optimal amount of margin that a firm can earn. And so in general, as well as we've mentioned, you want to avoid the erosion of the risk-based and risk-sharing business model of insurers. But so yeah, a lot to watch for, but we are quite confident that all these issues are being looked at carefully for now.
Thank you so much. And before I get the hook from Jonathan to get off the stage, this has been a great conversation. I do want to give a question that came from Dave Snyder at APCIA, which says, considering that AI can greatly assist in achieving the UN and IAIS goals mentioned yesterday, can the IAIS describe more about how it plans to balance the achievement of those goals with market conduct issues in the least burdensome way? And I'll take anyone who wants to answer that. Any one of my panelists. Benoît?
Yeah, I was not specifically raising my hand, but I mean, yeah, so you see the discussion going, right? So there's careful attention by supervisors and you see this pushback from industry saying, make it as light as possible. We already over-regulated. I mean, we just finished a review of Solvency II in Brussels, so I have quite a few stories for you there. So yeah, let's keep that balance for sure. Nobody wants useless regulation, but then the issues we discussed on this panel are quite massive with potential massive impact. So let's make sure we do what's needed to preserve the public interest.
And great. And so we are almost out of time. So I'm going to ask this last question that we received. Do regulators also use AI in their work? If yes, what implementation framework are they using? And I'll call on Petra for that.
Unmute. Yeah, thanks for the question. Yes, let me say first, how would I know? And that is besides within EIOPA doing surveys on subtech, we do the same in the FinTech forum at the IAIS level. And so what we see is that there is some use of AI. Carefully, I think what is the first consideration when we start using AI as supervisors is all the rules that we have in relation to confidentiality of the data that we use and that we get from the industry. So understanding what tools we put the data into and how then confidentiality is safeguarded, but also particularly if you move to generative AI, what will the outcome be, and does the outcome then include anything that could be confidential? So I think this is part of the questions that we are asking ourselves currently. But I can say that there is a use and we exchange on how we use that. I can also say that we are doing another survey this year within the FinTech Forum on subtech. Not like what tools do you use, but we are saying that what tools are successful, what subtech tools are successful, and why are they successful? So what are the key factors? Most of them are what we see when it comes to the use of subtech and AI are in a proof of concept stage. The particular question on what implementation framework are they using, I'm not sure if I can answer that because I don't have currently enough information of the individual initiatives. And again, most are in proof of concept. But we are on our way and being conscious very much of the fact that the data we are using are data from industry that come with, I think, very strict rules for good reasons. And we will follow them on confidentiality.
Thank you so much to all of our panelists. And I will toss it back to Jonathan. Thank you for having us today.
Thank you, Chlora, and thank you to all the panelists for an excellent discussion. I think lots of work ahead on this topic, but good to know that we can, I think, tackle it within our existing framework of insurance core principles and standards, particularly on governance and market conduct. Thank you to all of you online for joining us. That's it for today. We will be back tomorrow with the committee chair dialogue to hear about more detail on the work of the different committees. If you're not already registered, you can still register on our website. Also to say all of the recordings from our sessions this week will be on our website by Friday this week. If you want to see them ahead of that, you can access them on the IAIS's LinkedIn channel already. Lastly, you'll be receiving an email shortly with a link to a brief survey. We'd greatly value your feedback on this session. With that, thank you, and hopefully see you tomorrow.